Right now, Bitcoin is caught in a $65 million tug-of-war between leveraged bulls and bears, and one side is getting dangerously close to snapping.
In fact, look at this. There is a $37 million magnet of leveraged bets just sitting in a single price zone waiting to get wiped out.
You have to think of these liquidation pools as pure rocket fuel. The second the price touches these levels, a chain reaction of forced liquidations kicks off. So understanding this data isn't just an edge, it is absolutely essential for what's coming next.
But here's the real tension. The market is literally pinned between two of these giant pools. One is pulling the price up, and the other is dragging it down. So the only question that matters is, which one breaks first? We're about to analyze the data to find out. And hey, if you find this kind of analysis valuable, drop a like and share this.
Okay, let's break down the battlefield. First up, we've got the support wall forming below the current price. This is a huge pool of long liquidations, and it's acting like a powerful magnet, pulling the price down.
And what's really fascinating is watching this evolve. On the left, you've got the heat map from early this morning. Now look at the right, just 8 hours later. See that bright yellow band of liquidity right around $90,000? It's gotten way denser. This wall is getting stronger. But you got to remember, every dollar added just makes it a bigger, juicier target for a breakdown.
And this is where the money is. The notional value is just the total cash on the line. The first cluster is around 90,500, but the main event, the biggest pile of longs, is sitting right at 90K. If the price breaks down to this level, it's going to trigger a waterfall of forced selling. That is the #1 risk for bulls right now. By the way, make sure you subscribe to the YouTube channel so you don't miss our data updates.
But that's only half the story. Because hovering above the price, there's an equally massive cluster of short liquidations. This is acting as a major ceiling, but also a very tempting target to the upside.
And you can see that pressure from above so clearly here. See those bright yellow bands near $93,000? Every single one of those is a pocket of trapped short positions. If the price starts pushing up, those traders are forced to buy back their positions, which just adds more fuel to the fire.
Let's break down the numbers. Resistance starts to build at 92.5, but the real prize, the biggest cluster of shorts, is right at 93,000. This is classic short squeeze territory. A move into this zone could be incredibly fast and violent. We post real-time analysis as this develops, so make sure to follow us on Twitter for more updates.
So, what do we got? We have a giant pool of money below us acting as support, and another one above us acting as resistance. It's a battleground. Now we have to figure out the path of least resistance.
This is the one question every single trader is asking themselves right now. Is the market going to hunt the longs below, or is it going to go for the jugular and squeeze the shorts trapped above?
Let's weigh the odds. The bull case is pretty simple. Price is just closer to the short liquidations at 93K, and short squeezes are just a faster, more explosive way to grab liquidity. But on the bear side, you can't ignore that huge 90K pool. It's a powerful magnet, and big players often love to push the price down to clear out all that leverage before a real move up.
So, looking purely at the heat map data, the path of least resistance right now actually points up. The combination of proximity and the sheer density of capital trapped at $93,000 makes it the more immediate, more probable target for a liquidity hunt. If this breakdown is helping you see the market clearer, a like and share is always appreciated.
Okay, so what does this all mean for your strategy? Let's boil this all down into some clear, actionable takeaways. All right, here's your tactical summary. Your key resistance and primary upside target is $93,000. Your critical support, the line in the sand for bulls, is $90,000. You have to be ready for extreme volatility, because a clean break of either of those levels is going to lead to some rapid acceleration. The market is basically a coiled spring right now, pinned between these two zones. Subscribing to the YouTube channel is the best way to stay ahead of these moves.
So I'll leave you with this. Now that you have seen the data, which side do you think wins this battle? Is price going to push up and squeeze the shorts at 93,000? Or will it dive down to hunt the longs at 90,000? Drop your take in the comments, subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.